Hello everyone, hope you are doing good. It's been a series of fundamental videos and I thought it could be a bit boring. So today I would be talking about a topic with respect to technical analysis. So in order to master the art in stock market trading, it's very important that one knows both fundamental as well as technical. The fundamental analysis will give you the entry point to ensure the company is good, and the technical analysis will help you the price movement and kind of predict what the price is heading to. Well, technical analysis itself is an ocean. There are a lot of parameters and indicators available online for us to do technical analysis. So in today's video, I'm going to talk about moving average and moving average strategy, which is one of the key and effective indicators with respect to technical analysis. And my target audience for today's video are mostly beginners who are looking to learn and enter into technical analysis. And if you are someone who is already aware of these concepts and know what moving average is, probably you can skip this video, and others please continue watching this video. I'm going to make this video more interesting with some good live examples and good analyzing strategies. Okay, in order to use the moving average indicator in chart reading, we will go to this website called in.tradingview.com, which you are seeing on my screen. And there you can just register with your email and password. And once you are done with that, uh, probably you can just choose any company. For instance, I will choose Wipro. So Wipro chart is open. So it's a 1 day daily chart. So 1 day price movement, what you are seeing here. So in this, I'm gonna add the moving average indicator. So before that, I will explain what is moving average. So moving average is nothing but, let's say for 5 days, uh, you will take the closing price of last 5 days divided by 5. That will give the average price for today. Likewise, you can do for 10 days, 20 days, 50 days. So if it is 50 days, you can take the price of last 50 days divided by 50, and that's going to give the today's moving average price, right? So likewise, we're going to calculate the moving average for the entire uh, following days. And if we add as a line, right, so that's going to be the moving average indicator. So let's see how we do that in this tradingview.com website. So here you see these indicators. Just go here. Okay, you have the technical selected. Simply type moving average. So in this, choose moving average simple. So we are choosing the simple moving average, and it adds something here if you see. So here you need to change some settings. So this 9 is basically last 9 days moving average. So what I will do is I will change this to last 50 days. Okay, last 50 days. And I will also change the indicator color. Okay, so I will change it to green, and I will also make the size a bit thicker. Okay, so that's it. So this line what you are seeing is the 50 days moving average. Okay, so likewise I'm gonna add another moving average, that is 200 days moving average. So similarly, just type moving average, click moving average simple. It would add 9 days by default. Just double click to change the settings. I would put 200, and style I would choose a red color, and I will choose a thick line and click OK. Right. So the green one is the 50 days moving average, and the red one is the 200 days moving average. So with the help of this moving average indicator, we will use the crossing over strategy to predict the price movement. So what is crossing over strategy? So there is something called golden crossover. I'll explain you what is it. You see this Wipro chart. So the red line is the 200-day moving average, and the green line is following that, that is 50-day moving average. And this is the point where the 50-day moving average crosses the 200-day moving average. So meaning the lower number moving average crosses the higher number moving average. That is called golden crossover. So what happens when a golden crossover happens? When a golden crossover happens, more often than not, the stock price is gonna see the increasing trend. You see here at this point the crossover has happened, and you see the price has gone till this point. So there is a 38.57 percentage increase, that is 152 points. The stock price has increased after the golden crossover has happened. So this is one of the key strategies people use under moving average. Well, uh, there is also another concept called death crossover. So what is death crossover? So we will see that with this example. I have taken the chart of Hindustan Unilever company. So here the 50-day moving average crosses the 200-day moving average and goes down. Okay, in a golden crossover, from below it goes up, but in death crossover, from above the uh, the crossover happens on the downside. Okay, so if this happens, this is called death crossovers. So the death crossover here is happening at this point, and the price has gone down till this point. So the death crossover is something which is opposite of golden crossover. When this happens, the price is supposed to go down. Apart from the golden crossover and death crossover, what else we can predict with this moving averages? You see this chart of ICICI Bank. So this moving average also acts as a good uh, support level. Okay, you see here in this chart, um, whenever the price has come down and hit the 50-day moving average, it has again started going up. It has hit the line, started going up. It has hit the line, started going up. So this moving average indicators are also acting as a support level. Okay, so here in this region, it has breached the 50-day moving average, but see, it's taking support at 200-day moving average. See, so this chart is a very good example where the price is taking support at either 200-day moving average or 50-day moving average. So this is also one can use as a strategy. Okay, whenever it's gonna hit this line, there is a very good chance that the price might go up, right? So probably I would buy at this level and probably I could sell at this level. So these kind of strategies we can make by considering this as support. And the same way, so this happens in a uptrend. In a downtrend, let's again take an example of Hindustan Unilever. So there we were seeing some downtrend, right? See, here in the downtrend also, see, um, the moving average line here is taken as a resistance. See, the price is going to go up and it goes near the moving average and comes down. Again goes up and comes down, goes up, comes down. So here in a downtrend, the moving average line acts as a resistance. See here also, it has gone here and come down. It has gone here and come down. It has touched 200 days moving average and come down. So this indicates that in a downtrend, it acts as a resistance, and in an uptrend, the moving average acts as a support. So this is one of the key understanding one must have, when it comes to price action trading. So finally, I will conclude this video with one last point of how we can use these indicators effectively. So here you see the 50-day moving average line is expanding. So the gap between 200-day and 50-day averages are widening. So it means that the chart is getting stronger and stronger day by day. Okay, so people can make use of this to take their decisions. Okay, for example, if someone is holding the ICICI Bank, probably this indicates that they can hold it for some more time because the chart is looking strong and it might keep going with this increasing trend. Okay, that kind of decision one can take. And if in case it's in a downtrend and again the gap is widening in this way, then probably the chart is weak, right? So accordingly one can make their decision, right? So this moving average is one simple indicator, and with that we can kind of create whatever strategies which I have mentioned and accordingly make our investment decisions. So I hope you found this video helpful. If so, please do subscribe and support my channel. In my upcoming videos, I will come up with more context that's going to be useful for every one of us. Thank you so much.